Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. U.S. President Donald Trump and Israeli Prime Minister Benjamin Netanyahu agreed to a 20-point proposal to end the war in Gaza, but the plan is yet to be accepted by Hamas, which would need to agree to substantial concessions. Netanyahu tells Qatar he deeply regrets the deadly missile strike that targeted Hamas figures in Doha, affirming Israel will not be conducting similar attacks in the future. And shutdown looms. Vice President JD Vance says he believes the U.S. government is heading for a shutdown, blaming Democrats for refusing to approve a short-term spending bill. It's just gone 8 a.m. across the Emirates. It is 5 a.m. here in the UK. I'm here for the next couple of days. I'm Joanna Versace in London today and for the rest of the week. Bringing you up to speed on some of these markets and, of course, major geopolitical developments in the region. We're going to talk about that shortly, what it means for the Middle East and the prospects for a potential end to the war in Gaza. But for the time being, markets are very much focused on this looming shutdown deadline getting closer and closer. JD Vance suggesting that it is going to happen, that there will be a shutdown. And obviously that is going to have an impact on global markets and tends to have an impact mostly on equities, more so than bonds, if you look at the historicals. Today, S&P futures, though, not doing a whole lot. We are unchanged so far in the session. The USD slipping minor, just a small amount, basically trading flat. But again, the theme has been one of the dollar dipping, declining as we get closer and closer to that U.S. shutdown. And of course, don't forget that we have major jobs data to watch out for this week. JOLTS data coming up, ADP, and then on Friday, that big labor report, the NFP number that markets have been paying very close attention to for further signs of weakness in the U.S. economy. Gold, once again, an all-time record high. $3,865 is where we are at now. That's the mark, another 0.8% firmer. As you see a pullback in the USD, uncertainty about the U.S. politics, looming shutdown, all of that has benefited gold, and we see it day after day after day. Gold massively outperforming Bitcoin this year, by the way, for the records. Gold up 45%, Bitcoin up about 15%. And then Brent slipping down about 0.8%. Perhaps some of that geopolitical risk premium gets unwound, but I would say mostly ahead of the OPEC Plus meeting this week, where it is expected that the group will once again return extra barrels to the market. And so that sort of shifts the supply picture once again in favor of more supply coming in the next couple of months. So that's a picture for energy. Let's go back to regional politics, though. President Trump and Israeli Prime Minister Benjamin Netanyahu have agreed to a 20-point plan designed to end the war in Gaza. But it's unclear if Hamas will accept the proposal, which calls for the group to relinquish control of Gaza and release all hostages.
I also want to thank Prime Minister Netanyahu for agreeing to the plan. If accepted by Hamas, this proposal calls for the release of all remaining hostages immediately, but in no case more than 72 hours.
Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Dan, it was feted as a major milestone speech, press conference by both President Trump and the Israeli Prime Minister Netanyahu. Netanyahu saying that he signed on to this 20-point plan. First of all, what is exactly in the plan? Talk us through what's in the proposal.
Writ large, the conditions here are very similar to what we've heard set by Israel, which would be effectively a surrender by Hamas, an immediate return of the 48 hostages still held by Hamas, and a ceding by Hamas of what remains of its governance in the Gaza Strip, an exit of its leadership into exile, and presumably an amnesty for lower order members who would be absorbed back into the Palestinian community. Why is this different? Well, the US president has mustered the full force of his ego, of his clout, of his charisma, and he's also mobilized leaders of major Muslim and Arab countries. These are regional stakeholders who are in support of this plan. So this is meant not just to set out again those conditions for Hamas to effectively yield the ground and yield in this war to capitulate, but also to remind it that it is now effectively isolated in the region from powers which perhaps in the past might have sided with it or straddled the fence and signaled that it might be able to continue fighting.
How significant is it that just prior to this press conference taking place, the Qataris put out a statement saying that a phone call had taken place between the Israeli Prime Minister and the Qatari Prime Minister, with Israel extending an olive branch of some sort, expressing deep regret over the Qatar attack, and the Qataris frame it as an apology on behalf of the Israelis. How significant in the run-up to this 20-point proposal was that instance?
Well, it's crucial because, like Israel, Qatar is a U.S. ally. It was, however, outraged by a September 9th attack by Israel on the senior Hamas delegation hosted in the Qatari capital, an attack apparently intended to kill that leadership and expedite Israeli victory in this war, an attack that apparently failed to achieve that, but did kill a Qatari officer, a security officer, who was at the scene. Now, for this to work, it was pretty clear that the US president needed both those countries on side. They're not friendly, Qatar and Israel. They have cooperated in the past, but there's been a good deal of recrimination over this war, given Qatar's relationship with Hamas, although, of course, that's made Qatar indispensable in mediating between Israel and Hamas. For that mediation to continue, and mediation in this case meant effectively to persuade Hamas to surrender. There's still a stage of negotiation there in terms of the framework, the modalities of a surrender, which would take days or weeks, one imagines, once agreed. Qatar really needed to have a face-saving gesture by the Israelis. It's worth remembering here that the phrasing is deliberately different. Qatar has called this an apology. The Israelis and the White House readout has described it as a voicing of regret. A voicing of regret is not quite an apology. It doesn't have the same, it doesn't connote moral culpability and acceptance of moral culpability. And I think that's something Netanyahu really needed here, given Israeli anger at the fact that Qatar ever hosted a group like Hamas on its turf.
I would say one of the most important parts that stood out to me from the statement was Israel saying that they will not conduct an attack like this again. So that's clearly something that the Qatari side had pushed for. Bloomberg's Dan Williams in Jerusalem, thank you so much. Okay, let's now bring in Robert W. Jordan, former U.S. ambassador to Saudi Arabia. Good to have you with us, Ambassador. Do you think that yesterday marked a watershed moment? Do you see this as the precursor to the eventual end to the war in Gaza?
It has that potential, but I would not go so far as to say that's guaranteed. This is a movement forward that requires certainly the agreement of Hamas to start. I think the headline here, though, is that the Saudis, likely the Emiratis, and certainly Qatar are supporting this movement. And I think it's very important for us to remember that nothing can be really accomplished in this region and in this resolution without the aggressive participation of those Gulf monarchies. This is something that I think could be deemed as a breakthrough. But so much depends on how Israel interprets this, because there's tremendous resistance within Netanyahu's own party and his coalition to some of his provisions. And Hamas is, again, being required essentially to surrender. So I think it would be very difficult for us to see all of these elements really coming together to be accepted. But some of them might be, and to that extent, it's a step forward.
There was a side meeting at the UN General Assembly of President Trump with many of those Arab leaders. The Gulf states or the representatives were present. And so the understanding was that these Arab states had actually signed on to this 20-point peace plan proposal. So now the question becomes, what sort of pressure will these Gulf states put on Hamas to accept the terms of the proposal? And do you think they are doing so behind the scenes?
Yes, that's really the question. And my guess is they will be applying that pressure. Hamas has very little to gain from the literal terms of surrender, but it may still be possible for them to find a way to claim some sort of respectable resolution. I think it's going to require Hamas and its leaders to accept some sort of half measures to provide for something for the Palestinian people and the Palestinian political establishment to aspire to. And so there is some talk in these 20 points about the aspirations of the Palestinian people. I think Hamas may be able to make something out of that, but they've got to find something that is more of a carrot and less of a stick for Hamas to be able to sign on to this. Absent that, it may well be that this is performance rather than reality, because it is so difficult to get Hamas to agree to anything.
And indeed, there is a caveat that the Israeli Prime Minister brought up in the press conference yesterday, where he said that if the disarmament is not done to the level that Israel would like to see, then they retain the option to keep on with some of their ongoing military operations. So there is a caveat there. But then the question becomes also more broadly, what does it mean for some of the other ongoing military offensive that Israel is conducting around the region, not just in Gaza, but in the run-up to this? We had talked about the U.S. putting a red line on West Bank annexation. Does that mean that type of activity, those types of aspirations that many within the Israeli government will have to be dialed back as well, the ongoing operations in Lebanon? Do you see this as, the catalyst for all Israel's operations in the region to wind down, or is this just Gaza specific?
It's a tremendous opportunity to dial back the conflict. Israel has taken the position that any theoretical threat that they see in Lebanon or elsewhere is justifying military action there. And I think so many of the Western countries and even certainly our Arab allies are sort of being very turned off by this kind of approach. And so they're going to have to find, I think, a better way of getting across the importance of Israel's security, but at the same time not insisting on going to the absolute maximum of any kind of potential prevention in the region. It's really difficult to understand that Israel feels that they have to bomb fields and locations in Lebanon. They have to continue their strikes really across the entire region in order to maintain their security. We have so many allies, so many points of relationship with Israel that we have to find a way to convince them that this is really not the way to peace. This is something that has to be dialed back. And I applaud the administration's efforts in this regard. Yeah, that's a good place to leave it. Robert W. Jordan, former U.S. ambassador to Saudi Arabia, thank you so much for your perspectives on a very important morning in the region. Well, coming up, Bank of Singapore's Mehvish Ayub joins us to discuss the market risks as we also count down to a U.S. government shutdown and assess new tariffs on wood products. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in London. U.S. Vice President JD Vance says the government is on track for a shutdown after a bipartisan meeting failed to reach an agreement. President Donald Trump threatening to permanently fire federal workers en masse if the government shuts down.
Whatever our disagreements are, let's negotiate with them. Let's talk about them. Let's figure out a bipartisan solution, but you don't shut the government down. In other words, you don't put a gun to the American people's head and say, unless you do exactly what Senate and House Democrats want you to do, we're going to shut down your government. That's exactly what they're proposing out there.
And gold hits yet another record, cementing its place as the shutdown trade of choice. A U.S. government shutdown would not just cloud the Fed's monetary policy path, but could also hinder the release of economic reports, which would deprive investors of critical data to assess the U.S. economy. The metal has surged more than 45% since the start of the year, actually up 47% now. And meanwhile, tariff risk is still on the table after President Trump ordered levies on imports of softwood timber and lumber, as well as wood products. Canada stands to be hit hard by the order, as it's the U.S.'s largest wood supplier. Mehvish Ayub, Bank of Singapore, Head of Managed Solutions Advisory, is joining us now. Another day of news coming out of the U.S., whether it's on tariffs, but also on this potential looming shutdown. Let's start with the shutdown, Mehvish. How big of a market risk is it for investors this week if we actually do get a U.S. government shutdown?
Good morning, Jemana, and thank you for having me on. So you are absolutely right. I mean, we are likely to have a government shutdown at this stage, but I think the important thing to note is that it has happened on an annual basis, and the key consequence, I think, is really going to be whether that payrolls report on Friday gets released or not, which is absolutely crucial to determining, the economic growth outlook, whether the labour market is continuing to soften, and the Fed market reaction thereafter. So unfortunately, it happens on a regular basis. And so I think the actual market reaction to the shutdown will be minimal. It will be more so to the delay of data.
Yeah. And on the data front, how pivotal is the jobs market data going to be on Friday? And by the way, it's not just Friday's data. You have JOLTS, you have ADP, all of those signals coming through on the U.S. labor market. How significant do you think they will be in terms of determining the direction for monetary policy from here as well?
Mm-hmm. No, I think it would be really important because the market has, as usual, gotten ahead of itself and actually quite aggressively priced in rate cuts, around 3 to 4 by June 2026. So the data releases will be really important in determining where we are with the Fed median dot plot versus market expectations. I think the other thing to note is at the beginning of this year, we were hitting over 200K in payrolls, and we've come all the way back down to below 50K. And so I think the market has not been used to, for a number of years, of seeing any negative prints. I'm not saying there's going to be a negative print, but I think the magnitude of revisions in payrolls suggests that we could see one, and that I think market sentiment would be quite negative if we saw something like that.
And yet, a lot of the signals that have come through most recently from the U.S. economy have actually been pretty upbeat. You had strong spending numbers come through on Friday, personal income, PCE in line with expectations. Second quarter GDP, I know it was some way away now, also showing robust U.S. growth of more than 3%. It seems as though the U.S. is seeing a moderate slowdown, but really very far away from what some people thought might be a recession.
Yeah, no, you are right. And I think in the absence of a recessionary backdrop, Fed rate cuts generally are positive for growth assets and particularly equity. So I think we will continue to see tailwinds for equity markets. But I think we have to take a step back and think, how far have we come in a very short space of time? I think MSCI World is up circa 35% post the trough in April. And so we personally at Bank of Singapore, our CIO office has recently taken a bit of risk off the table. We are still slightly overweight broad equity, but we have gone from overweight in European equities to more neutral. So I think it's prudent to ask the question at this point in time, could we be subject to a near-term consolidation, or how do you protect the equity gains that you have on the table year to date?
And what do you think of the gold trades? We've been talking about gold as being the preferred shutdown trade for this week. It's up more than 45% this year. Just an astonishing rally. Do you still want to be positioned in gold, even at these levels?
Yeah, no, I think everyone has had that question since the beginning of this year, and they've essentially missed the rally. So I think if we look at the secular tailwinds behind gold in a Fed rate cutting cycle, when yields are lower, typically the opportunity cost for holding gold is improved. You also have this structural decline in sort of owning US dollar assets, and I think the beneficiary of that has been gold, and of course it is a safe haven asset. So it's one of the key ways in which we are recommending clients to add some diversification in their portfolios.
Yeah. And let me just round up by asking, you're saying that you're sort of scaling back some of your positions in equities. You talk about being neutral on European equities. How are you thinking about the upside in Chinese-related equities, especially because of the run-up we've had recently in AI-related stocks?
Yeah, no, Asia ex-Japan equities is still an area that we're quite considerably overweight, and we do see a number of secular tailwinds driving that. The first is essentially monetary policy support. So in a Fed rate cutting cycle, you typically have an improvement in terms of PE multiples in Asia markets, China and India specifically. It also gives Asian central banks some breathing space to ease monetarily as well. But you also have some fiscal support coming in countries, specifically China, India, Malaysia, the Philippines. And so you've got that monetary side, you've got the fiscal side, and you've got the general tailwind from generally a pro-growth risk environment.
Mehvish, always good to chat to you. Thank you so much. Mehvish Ayub, Bank of Singapore, Head of Managed Solutions Advisory. Well, still ahead this hour, Africa-focused oil and gas company Afentra is exploring partnerships in Angola and Nigeria. We'll hear from the CEO, Paul McDade, on the company's plans. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in London. The Trump Organization is set to build a new $1 billion commercial and housing development in Jeddah. London-listed Saudi developer Dar Global has partnered on the project dubbed Trump Plaza, which will include residential and office space and a Central Park-inspired green park. It's the second Trump property for Jeddah, with a Trump Tower, including a hotel and members-only club, already under construction. The $524 billion Qatar Investment Authority, QIA, is increasing its investments in the U.S. with a focus on AI and digital infrastructure, despite geopolitical tensions in the Middle East. The Sovereign Wealth Fund has made a number of high-profile commitments, including a $1 billion investment in a data center venture with Blue Owl Capital and participation in funding rounds for Anthropic and xAI. QIA CEO Mohammed Al-Suwaidi says the U.S. is a top priority market for the fund. And a look at equity futures. Shutdown is on people's minds, but S&P futures not doing a whole lot today, trading unchanged, and Nasdaq similar, trading sideways. European markets dipping a little bit as we get into the European Open. But still ahead, President Donald Trump's new plan to end the Gaza war is widely seen as an ultimatum to Hamas. We dig deeper into what the plan really means. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. U.S. President Donald Trump and Israeli Prime Minister Benjamin Netanyahu agreed to a 20-point proposal to end the war in Gaza, but the plan is yet to be accepted by Hamas, which would need to agree to substantial concessions. Shutdown looms. Vice President JD Vance says he believes the U.S. government is heading for a shutdown, blaming Democrats for refusing to approve a short-term spending bill. And Trump orders tariffs on imports of softwood, timber, and lumber, as well as levies on kitchen cabinets, vanities, and upholstered wood products. Well, it's just gone 8:30 a.m. across the Emirates, 5:30 in the UK. I'm Joanna Bersachi in London. We're actually just getting some breaking news. There are other central banks around the world, the RBA, just getting this from Australia now. They have decided to leave the cash rates at 3.6% versus estimates of 3.6%. No economists were actually expecting an interest rate cut. But in terms of the language, RBA is saying labor underutilization remains at low rates, but the decline in underlying inflation has slowed. They will do what's necessary to achieve price and their jobs mandate, but the labor market conditions are broadly steady. Uncertainties about the outlook for domestic economic activity, but the board did judge it was appropriate to remain cautious. Now, here's a line on inflation, which is worth taking note of. Recent data suggests that third quarter inflation may actually be higher than seen. Board remains alert to heightened uncertainty on international developments and on the outlook. Uncertainty about inflation from local and international developments. So perhaps the market is latching on to some of those comments about the potential for heightened uncertainty on inflation, that third quarter inflation may be higher than seen. So a bit of hawkish commentary coming through there. But essentially, they kept rates unchanged at 3.6%. They have signaled that the decline in underlying inflation has slowed, talked about upside risk to inflation and uncertainty stemming from the global environment. And here you can see the reaction in the Aussie dollar. It's gaining ground versus the USD, up around 0.3% today. So that is coming through from the RBA. As for broader markets, the focus is on the U.S. shutdown. We're getting closer and closer to the deadline tonight. The Vice President JD Vance signaled that a shutdown probably will happen. So S&P futures not doing a whole lot today, but as we were speaking with our prior guest, the impact is likely going to be on the delay when it comes to these important jobs figures releases later in the week. So it'll be difficult to assess the direction of monetary policy if you don't actually have the data to contend with. So some questions there as to what the shutdown may mean for data releases later in the week. The USD trading sideways today. But the biggest beneficiary of all of this uncertainty, both geopolitical and U.S. domestic, is gold, getting closer to 3,900. I mean, just astonishing price action. Yesterday I was here, well, not here, I was in Dubai talking about gold getting close to 3,800. And one day later, we're talking about getting it close to 3,900. So stunning rally. It's up more than 45% this year. And then Brent slipping a little bit in trading, down 0.6% today, just shy of $68, 67.5 is where we're at, possibly in anticipation of this OPEC Plus decision this weekend. Reports that they may once again look to increase supply to the market. Let's switch over. I also just want to show you a chart of the Israeli shekel. Why am I pointing this out? Obviously, major announcement last night with the Israeli Prime Minister saying that they're happy to sign on to the U.S. peace proposal, their 20-point proposal, with some caveats, of course. And one of the major ones is the full disarmament of Hamas. But on the back of that, what we're seeing is very strong reaction in the Israeli shekel. It's trading at the strongest versus the USD in the past 3 years. And you can see versus the USD this year, it's also gained around 10%. So keeping a close eye also on how the geopolitical developments are affecting some of the local markets as well. Okay, let's also check in on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. Min Min.
Hey, Jumana, as you can see on the board here, Asian markets looking pretty resilient in the face of that looming U.S. government shutdown. And here you can see the TAIEX is up about 1.4%. A bit of a catch-up rally going on after markets were shut yesterday for a holiday. And it seems like the TAIEX is really shrugging off some of those geopolitical concerns, reports around how China is calling on the U.S. to oppose Taiwanese independence, as well as those comments from Howard Lutnick calling on Taiwan and TSMC to increase its investment and chips productions in the U.S., but still, TAIEX not rattled so far. The CSI 300 also up about 0.2%, the rest not doing so much. But Chinese markets continuing to see that rally, partly because of the PMI data that we got today. If we flip the board, you can see that it was better than expected. We still are seeing a contraction. Okay, let's talk about this chart first. Here you can see the MSCI China is logging 5 months of gain. This is the longest streak of gain since 2018. And a part of this is because of PMI data, which I'll talk about in a little bit, but also some of the geopolitical signals, right, with President Xi saying that he is going to attend the South Korea APEC summit to meet with President Trump. And as I said, the PMI data looking slightly better than expected, at least better off than the collapse that we saw back in April as well.
Yeah, Min Min Lo in Hong Kong, and that's going to be the next big one to watch. Remember, end of October, that APEC summit where President Trump said he would consider meeting with President Xi. So something else to watch out for. But between now and then, a lot to get through. Let's talk about oil. It fell for a second session as the market weighed a looming glut and the possibility for an end to the war in Gaza. President Trump and Israeli Prime Minister Benjamin Netanyahu have agreed to a 20-point plan designed to end the war in Gaza, but it remains unclear whether Hamas will accept the proposal. Joining me now is Rachel Ziemba, founder of Ziemba Insights. Rachel, good to have you with us. I know you keep a very close tab of geopolitical developments in the Middle East. So I'd love to hear your insight, your perspectives on what we got yesterday and whether you actually think this is a watershed moment.
Thank you, Jumana. It's such a pleasure to be with you. I'm sorry you're in London, but another one of my favorite cities. I think this, we'll see whether this is a watershed moment for Palestine. For the oil market, and I hope that it is, I think it's still a tall order, right? A lot of asks for, and a lot of asks. For the oil markets, I think it's less of an event. I think the oil markets are really watching what's happening with snapback on Iran, which was formally came into effect on Friday. That's likely not going to move markets much in the short term, and still really watching what happens in the other big conflict with Russia and Ukraine. So I think those are where markets are looking. And then you have OPEC Plus saying we'll continue to add. So I think all of this ends with a bit of a bearish, well-supplied market tilt right now in the markets, and that's why people are putting money into gold and some other commodities rather than oil.
Yeah. Let me ask you about the price action in oil, though, the last couple of days. I mean, we're down, 2-3%. We were trading close to 70 on Friday, but have pulled back. Do you see that as anticipation into the OPEC Plus supply decision this weekend, or do you see it as the market unwinding some of the geopolitical risk premium? What do you think is going on?
Yeah, I think where we are now is sort of where we were the middle of last week, right? We've gone back to this sort of upper mid-60s trading range that we've been in for quite some time, and I think we'll probably stay. The fact that we've had OPEC Plus signaling that they might continue to unwind cuts. Now, this is a new phase of cut unwinding, but involving the same countries that have been unwinding these cuts. And so I think it still looks supplied. The big thing I'm watching there, I think the market is struggling to process, is how strong Chinese demand will be. The big story out of the meetings in Singapore was that China was stockpiling. Chinese final demand looked a little soft. And so I think there's also still some questions as we get towards the fall, as we get towards the new year, when demand is a little bit softer, will China keep stockpiling? And if oil prices move up above this trading range, we might see China pull back a little bit in this way. So far, they're still buying discounted oil wherever they can find it, and they're also tying up tankers in floating storage. And so that's something else we're watching.
So let me ask you about that discounted oil, because President Trump's tone and rhetoric towards Russia has hardened significantly in the last couple of weeks. We saw that at the UN General Assembly last week. And we know that he's applying those extra tariffs on India as sort of a punishment for continuing to buy Russian oil. Do you see the U.S. administration toughening up, their stance on Russian production, Russian supplies, on countries that continue to buy Russian oil? And do you see it having a meaningful impact ultimately on the amount of oil that's available?
My base case is that it won't be meaningful. Trump and his team are talking tough. We're also seeing the Europeans do some different steps to try to reduce their own purchases, particularly of natural gas, though they're waiting till 2027. Ultimately, I think, though, the fact that the Trump administration couched their willingness to be tougher on whether the Europeans join them in putting secondary sanctions on China and India makes me think this threat is a bit less credible. And we also have to weigh this against the fact that Trump wants oil to remain cheap and believes that cheaper oil would actually push Russia out of the war effort even more so than higher oil prices. So I think those two competing trends are going to be present. Now, Trump will continue to be tough on Iran. I know I shrugged off the snapback impact in and of itself as the Europeans reimpose sanctions that in effect haven't been meaningful for some time. But the U.S. could do more unilateral measures. Now, you and Min Min just talked about the Trump-Xi meeting. I think we have to watch that for the oil markets as well. Reports suggest, I think maybe from your colleagues, that China is again buying a few cargoes of U.S. crude oil. If so, that would be the first time in about 6 months since the sort of April really extensive tariffs. So on the margins, we could see China going back, diversifying a little bit. They're not buying the large volumes of U.S. Oil products and LNG that they were last year, but this might be a bit of a peace offering. So I think we see China likely to hedge their risks ahead.
Yeah. Interesting. It was also part of the conversation that President Trump had with President Erdogan from Turkey last week as well. He somehow always weaves energy into these conversations. Rachel Ziemba, founder Ziemba Insights, so good to have you with us on the show. Thank you so much.
Pleasure.
Now, Africa-focused oil and gas company Afentra is exploring partnerships in Angola and Nigeria. The CEO, Paul McDade, spoke to Bloomberg's Paul Burkhardt about transformation in the continent's upstream sector and his outlook for the oil price.
We clearly started the company because we had a positive view on oil and gas going forward and a positive view on pricing. However, we see quite a bit of volatility. And so really our job is not to try and predict the oil price, because we'll probably get it wrong. But I think it's having a bit of a view, but then managing the company and the finances of the company to be robust when if oil prices come off from where they are today in high 60s, and people are talking about, will we have a soft next 6 months? Well, we just need to have a strong balance sheet to sustain our way through that. But then position ourselves in terms of acquisitions or investments so that, when oil price does start to take off again, then we're well placed to benefit from that. So I think you can't sit here and say what the oil price will be. I'm quite bullish on pricing, but I'm also quite cautious about short-term volatility in pricing, and we just have to navigate the company's finances to cope with that spectrum.
And on the continent, or like the companies that are very active on the continent, a lot of the smaller ones, do you see some consolidation? Because as I've been asking about that, that there seems to be a view, like especially companies like Afentra that are looking at mature, or that are producing like mature assets, that there might be some consolidation, of those companies. Is that possible?
I mean, we've seen in other markets, for example in Angola, where there are fewer local independent companies. One of the strategies we've taken, because we're pretty much wholly focused on Angola at the moment, is actually working with those companies and making partnerships with them, as opposed to consolidating with them, actually just making partnerships with them and helping them increase their capacity, both in the onshore and the offshore. So, there's always consolidation. It happens sometimes when the oil price comes off a little bit and things get a bit tighter, then we see more of it. But in terms of Afentra, I mean, we've got a very clear strategy, and we're being successful over the last 4 years or 4.5 years since the company was formed, and doing what we set out to do. And we see a lot more potential just to grow independently.
That was Afentra CEO Paul McDade. Well, coming up, we're live to Liverpool, where the UK Labour Party faithful are preparing to hear from Prime Minister Keir Starmer later today, as he attempts to revive his premiership amid collapsing polling for both major parties. This is Bloomberg. UK Prime Minister Keir Starmer will attempt to revive his political fortunes later today as he addresses the Labour Party's annual conference. His Chancellor, Rachel Reeves, used her speech yesterday to promote the government's fiscal responsibility as a path to retaining power. Looking ahead to November's budget, she told Bloomberg's Lizzie Burden that pledges to not raise key taxes still hold.
Yes, it does, and we also made that commitment around corporation tax as well, and those commitments stand, and they stand for a reason, because working people paid a heavy price in the last Parliament. It was the worst Parliament on record for living standards. It's still the biggest challenge for working people, so those commitments stand. But what I want your viewers to know, that my commitments to economic stability, to fiscal responsibility, and to those fiscal rules, they absolutely stand, because they are the bedrock of stability, and only with stability can we grow the economy.
Well, joining us from Liverpool is the lady herself, UK correspondent Lizzie Burden. A great interview with the Chancellor. You know, it's interesting that she's saying to you that they're insistent on keeping their pledge not to raise major taxes, but at the same time they're contending with a major fiscal hole. So how do you square the circle up? Did we learn anything about what could be in that November budget, Lizzie?
Yeah, it's going to take some creative thinking, Jemana. That was her strongest wording yet, her strongest commitment yet, not to pull on those three levers of tax. And as you say, she still needs to find £35 billion, our economists estimate, to meet her fiscal rules. So where's she going to find it? Well, we know that she previously raised the payroll tax on employers but not on employees. When it comes to VAT, she could broaden the scope rather than raising the level. And when it's income tax, instead again of raising the level, she could freeze the thresholds at which it's paid. So a bit of a stealth tax there. So instead of getting in the weeds of UK tax policy, I'll just leave the viewer knowing that it could be that the sums still add up. But what if there's more to pay for? I asked the Chancellor, are you looking at lifting the two-child benefit cap? She said that she wants to go further on child poverty, but only when they can afford it. Conveniently, yesterday, after that interview, she went on to signal that she could be open to raising a gambling tax, which, by the way, raises almost about the same amount of money as it would cost to lift that cap. So maybe, Jemana, this could be the policy rabbit that the Prime Minister pulls out of the hat in his speech later on today.
Yeah, well, keeping a close eye on 30-year gilts, trading at 5.5%. So again, there's not a lot of wiggle room when it comes to the fiscal side of things. But as you say, the Prime Minister is speaking later today. Very low poll ratings, and obviously a lot of competition coming through from the Reform Party with Nigel Farage. What are we expecting to hear from the Prime Minister?
Yeah, it has to be said that a policy rabbit out of the hat probably isn't going to rescue Keir Starmer from that languishing position in the polls behind Nigel Farage. The message of this conference so far has been that Labour needs to take the fight to Farage. The Chancellor yesterday in her speech saying that he poses the greatest threat, the single greatest threat to working Britons right now. They're trying to unite the party to fight the right. But the danger is that Starmer alienates the left of his party while focusing on the populist right. And actually, when you talk to business leaders here, they're already quite worried about Reform's policies when it comes to business, because they still want to have global talent brought in from outside Britain. But you've also got the threat from within Labour. The Mayor of Manchester, Andy Burnham, according to a YouGov poll, would be the favourite candidate to lead the Labour Party over Prime Minister Keir Starmer. He yesterday dampened the speculation, saying that he's pretty happy in his current job. So it appears right now that Starmer has tightened his grip on his party. But Jemana, the mood here in Liverpool, going into this speech, it has to be said, is very flat.
Bloomberg's UK correspondent Lizzie Burden in Liverpool. Thank you so much for the overview. And coming up, Nigeria's government steps in to defuse a clash between oil workers and Africa's richest man. Details next. This is Bloomberg. Nigeria's government is stepping in to ease tension with the country's biggest oil and gas labor group. The move comes amid a dispute with billionaire Aliko Dangote, sparking threats to halt crude production. For more, Bloomberg's Ndira Ganga joins us now from Kigali, Rwanda. Just run us through the story. What do we know about what's going on?
Jumana, so this tiff is between the Petroleum and Natural Gas Senior Staff Association and Dangote, who claim that Dangote is against his workers joining the union. And as a result, those who have joined the union have ended up losing their jobs. So far, over 800 jobs have been lost and counting. And then on the other hand, you have Dangote, who is claiming continuous sabotage and says that this is not a targeted campaign. They are reorganizing the company. And as a result, just a sizable amount of jobs have been lost. Also, the Vice President Dangote Industries reinstated the same message to Bloomberg, telling us that it's just an internal reorganization. And while firing is happening, hiring is also happening concurrently. And what we are seeing is pushback from Pengasine, who are saying that if these workers are not reinstated, then you're going to face consequences. So far, they've directed their members to cut crude supply to Dangote. And Dangote is saying that this could have serious ramifications, not only for the refinery, but also for the country. This is a refinery that produces 650,000 barrels a day. It could affect exports in the country. Dangote also caters to that 5 to 50% of gasoline demand in the country. And he says that if that supply is cut, then he cannot continue to supply gasoline in Naira. So this could jeopardize the national security, particularly when it comes to energy and also the economic growth of the country.
Yeah, we spoke about that recently, some of the tailwinds coming through on the reform side of things. Bloomberg's Onjiro Ganga in Kigali, Rwanda. Thank you for bringing us the latest there. Well, a quick look at how equity futures are trading. You would think by the price action this morning that not a lot is going on, but actually a lot is going on as we get closer and closer to that U.S. shutdown tonight and the new lumber and timber wood tariffs applied by the Trump administration. So things are leaning slightly towards the red. That's it for Horizons Middle East and Africa. I'm Johanna Versace in London. Stay with me for Daybreak Europe. This is Bloomberg.